Hey, thanks very much. Chuck Malamut is here. This program is presented each Tuesday morning in the 8 o'clock hour by Chuck Malamut, who is a financial advisor at Morgan Stanley. The information, views, opinions expressed on this program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of the broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck Malamut, top of the morning to you.
Good morning, Harry. How are you today?
Good. I gave the 6 a.m. arisers the breaking news about Talkers Magazine, and I said that they get it first because of waking up at 6, but we would make a quick announcement at 8 o'clock for anybody that missed it in the 6 o'clock hour. And we just want to take this opportunity to thank Michael Harrison, the entire editorial board team at Talkers Magazine, which is literally the definitive publication. You know, if you were in the financial industry, it would be a number of different periodicals and publications, you know, that are out there. In our business, the talk radio business, Talkers Magazine, which is well into its 26th year in business for 21 years, they have done what is called the top 100 most important radio talk radio hosts, I think they call it in that order, in America. And it's also known as the Heavy 100 list. And for the second consecutive year, we made the list. It took 20 years to make the list once. We now have the repeat, and we went from number 100 to number 70. We moved up 30 places in 1 year. I mean, for example, last year, our good friend Joe Piscopo was 70-something, and we were 100th, and I couldn't have been happier. This year, we are 70, and our good friend Joe Piscopo, who was about 23 places ahead of us last year, we're now 7 spots ahead of Joe. It was a tremendous move in the rankings, and we are so appreciative of it because this is the kind of thing you can't ask for it. I mean, you just have to get sort of discovered. And Chuck, you know, thank you for giving me a couple of minutes just to let our listeners know that happened.
Harry, great job. What else can I say?
It was a good year, and we thank Talkers
So let's
Magazine.
see. So you go from 100 to
70.
So you're a pretty good math guy.
Well, I'm not going to say 70 to 40. I'm not going to do anything like that. I mean, I don't know. Paul Rotella and I had a conversation about this yesterday. I don't know that I've ever seen someone jump 30 places in 1 year. It's very, very unusual, and we are extremely grateful for the recognition.
So, Harry, you're now making excuses why you will not be number 40 next year?
Well, I just think it's a little bit, too much to ask for.
All right. Well, if you don't ask, you don't. If you don't, how's the old expression go?
Shoot for the moon, shoot for the stars, go for the moon. But thanks to Talkers Magazine because there's only 100 places, and it's very nice to.
No, seriously
to
speaking, Harry, great job. Congratulations.
Thank you, Chuck.
I'm very, very proud of you.
Thank you, buddy. So what's happening?
It was very interesting to listen to you and Kirk this morning as you were chatting about, and this is certainly a little bit off the comments that I wanted to share with your listeners as we get into the hour, but I had an opportunity to spend some time in the southern part of Florida and unfortunately missed your big event over the weekend. But what I found very interesting was that it's incredible the business that is being done in the state of Florida.
Oh, yeah.
And the infrastructure on the highways and the free roads that you can travel. You shake your head and you come back here to New Jersey.
And they're falling apart, and we have to spend a fortune to ride them.
And the New Jersey State Transportation Trust Fund is, again, another agency that has their fair share of problems because it's dependent upon certain revenues and the appropriations made by the state of New Jersey. So, having said all that, it comes as no surprise as Teffer leaves, big hedge fund guy leaves the state of New Jersey, and everybody throws up their arms and says, "Why are you leaving?" It's pretty simple, and I think we're
the cost of doing business.
I think we're going to see more of the same. And it requires 6 months and a day to be outside of the state. To be a resident of another location, re-registration of your automobiles, changing your voter registration, changing your driver's license. Doesn't take much. Doesn't take much. And I'll tell you what, there's a whole lot to be said about being in an environment where it's 75-plus degrees, sunny, versus where we were this past weekend with, 1 to 3 inches of snow on Saturday.
Yeah, and going from confiscation-level taxation policies to a very fair tax policy. You know what I like about Florida too, Chuck? And then we have a special guest that just wants to come on for a minute, unrelated to the Malamut program. It's the president of the New Jersey Broadcasters Association. I think I know what he wants to talk about. But what people have to take a look at is we have to, if Cuomo can do it in New York and start offering 10-year tax abatements and really incentivize people to invest, it cannot be that people would invest in New York before they would invest in New Jersey.
Absolutely.
That's madness. Mm-hmm. It's madness. But in Florida, and I'm using the term progressive and regressive differently than the political meaning of it, there's progressive taxing in Florida. If you buy something, you pay a tax. That's good.
Yeah, it should, and Harry, that should be that way.
Yeah, but here they're taxing you when you breathe. So let's bring Paul on real quick. He's just said he needs a minute. Paul, welcome to the program. You're on the air.
Good morning, Harry, Chuck, and everyone. And thank you, Chuck, for letting me interrupt your program. I'm here at Military Joint Base McGuire, Dix, Lakehurst. We're about to start our board meeting, Harry, but I couldn't let the day go by without congratulating you on making all of New Jersey broadcasters proud. To not be on the heavy 100 list is something. To be on it is incredible, but to move 30 points up, and Harry, I know and you know that and I asked you this question yesterday, I wasn't wondering if you were going to be on the list. I was wondering how high you would move up. And I'm going to check with Mike Harrison because I have a feeling I don't think any other talk show host has ever jumped 30 points in 1 year. So that's something, a statistic I need to find out. But in the meantime, congratulations on this wonderful honor for making all New Jersey broadcasters and indeed all New Jersey proud of your accomplishment and the way you serve your audience that loves you so much and serves the Atlantic City region. So with that, the heartfelt congratulations of the New Jersey broadcasters, my friend.
Paul, thank you so much, and thank you for your leadership, in making all of us look good, and we appreciate your partnership.
Well, thank you, Harry. Chuck, back to the show.
And by the way, have a great meeting. I know it's a special day because you're in the field and at a very special location doing important work, so we wish you a good day.
Well, the hospitality here has been great. And, Harry, believe me, you're on the agenda. We're going to bring it up and mention your accomplishment at our board meeting today.
Thank you, Paul. That's very meaningful.
Take care, guys.
Thank you, sir. Appreciate that.
Have a good day, Paul.
Chuck, I know you're going to get into first quarter 2016 review. We're going to talk about corporate earnings. We're going to talk about the U.S. economy in general. We're going to talk about investor confidence. I think that's very important because anytime you have investor confidence, things really seem to, to bode well. Where would you like to begin?
Well, Harry, I guess we can start at what we had or had not accomplished in the first quarter. As we look back, the risk markets, globally speaking, were very, very volatile in the first quarter. Remember that we had the worst January in the history of the stock market. We had a retracement in February, March. U.S. stock holders were basically even for the quarter. International positions were down anywhere from 3 to 5% in with respect to U.S. dollar terms. We were faced with potentially a global recession, central bank inefficiencies. Again, China, all about China, their currency war and declining oil prices. So as we go back and look at the quarter, I think investors be very, very surprised to understand that gold, emerging markets, and REITs or REITs were the best performers. Japanese stocks and MLPs, master limited partnerships, were the weakest performers among the major asset classes. So, and for the 1 year period, believe it or not, gold and global investment grade bonds were the top performing asset classes. Now, if you ever said to me that would be happening a year ago, I would shake my head and I'd say, Harry, I don't think that would be happening. So now as we're looking into the results, Alcoa posted last night, and as you basically called it, a miss and then a make. Stock, miss on the top, make on the bottom. Stock was off, maybe almost 3% actually in after hours trading. But that's just a company. I mean, now we're starting to see, as we get into the latter part of this week, a lot of the big banks coming. And quite frankly, we're not looking for a very, very stellar quarter. A lot of the forecasts were basically moved down fairly significantly. And if quarterly earnings come as expected, it's probably going to be, again, now the fourth consecutive quarter of reduced earnings year over year.
Let me ask you this, Chuck, because you do present a wide spectrum of observation when it comes to this. When you miss the top line and you make the bottom line, you've made it because you were able to do certain efficiencies in operations and make certain cuts and so on. What do you say to the question, you cannot, or the concept, you cannot cut your way to prosperity?
Harry, we have cut our way to not to prosperity, but we have cut our way as much as we have been able to increase earnings on a quarter by quarter basis. But technology improvements we've always chatted about, and they're there and they're helpful. But I think you get to the point, and again, I was very interested in listening to you and Kirk talking about Iceland. Mm-hmm. And the fact that obviously a small country. And I think what I got out of that discussion was that for the most part, the majority of the population are of the personality type where they want to go get positive things accomplished. Yep. Unfortunately, I don't think we can say the same thing about the population, that we have here in the U.S. And I'm not going to, as you say, we're not going to go and talk about government and what government can and cannot do. But I think, what has happened over the last several years has certainly not been productive on a long-term basis for our country. And now we have an opportunity to make some changes and get us back to where we need to be.
Brief time out. More with Chuck Malamut coming up. We have a national guest coming by in the final 10 minutes of the hour. Sunny Anderson from the Food Network will be joining us, Food Network Television, and she'll be talking about different travel and healthy lifestyle issues. More with Chuck Malamut and Your Financial Matters. To reach Chuck, who is the managing director of his group, the Malamut Group, at Morgan Stanley's Northfield office, dial 609-383-2010. And Chuck can introduce you to his concept and his team's concept of total asset management coupled with the all-important asset allocation. 609-383-2010. 609-383-2010. We're back, 21 minutes past the hour. I'm so tempted to just have a nice laugh about what Chuck and I just shared before airtime. It's very positive, and it's about the 9th Annual Hurley in the Morning Golf Open. Yesterday, and I thank Beth, who's done such a great job working with us. What I do, I have to compartmentalize because otherwise it's just too much. It's too much work. It's too much. But as long as I get one thing done, it's what my father taught me as a young boy. You get one thing done, and then you get another thing done, and before you know it, it's all done. And I can't think about the golf tournament as much as I would like to. We do. I mean, we've already signed up foursomes. We already have whole sponsors. John in Skullville, for example, who's listening right now, sponsored two, and he took care of that a few weeks ago. Senator Carrillo sent us a nice contribution, which we're going to be depositing at Morgan Stanley today, and some other folks did as well, Freeholder Risley and some other folks. But once my dinner is over, that's why we do it typically in that first week of April. Next year, it looks like April 7th will be our dinner, Friday, April 7th. That will be before Easter because Easter sometimes is later, and so this year it will be during Lent. But we always have a nice fish dish if anybody is, refraining from meat or anything like that. But we just finished the brochure over the weekend, and we're getting to go now, getting going, Chuck, on the 9th Annual Hurley in the Morning Golf Open. It's, of course, we race to raise as much money as we can so we can give out as many grants as we can.
What is the goal, Harry?
I don't set a number. I mean, we always do over 50,000, but I don't set a number because that puts too much pressure in a way that's not fair, and especially in the economy. We just try to max out. If we sell one hole sponsor on each hole and then do it again, which we've been averaging more than one, two, or more per hole. And then if we have a max out amount of golfers and we do at least $10,000 in the silent auction, which we typically do, we meet our number.
Yeah, very interesting, Harry. I mean, as much that I remember last year you spent a lot of time, effort, energy chatting about and using the funds that you raised for the local community.
Yeah.
And now it's even that much more important.
Yep.
As we get into the spring and the summer of 2016.
I'll tell you another thing that we're able to do. You talk about top line, bottom line. This is a little different than that, but it's in the same, different pew, same church. We're cutting. We never had a lot of expenses, as you know. You manage our money, but we're cutting as many expenses as possible so that almost everything will be a grant. We have a tremendous partner that's doing things that used to cost thousands of dollars, complimentary. It should have always been that way. That's going to be huge because every dollar we don't spend, we can give a grant to a important not-for-profit that needs it. And Chuck, I know you will agree with this. Over the past 7-8 years, during the Great Recession of nearly a decade now, the need is greater than ever before.
Well, Harry, it's absolutely. I can't tell you how important it is now for your listeners to all get on board. And I know that they are very generous, but now it's even that much more important as we hopefully work our way through just these awful times that we are living through, particularly in the world's greatest resort, that being the city of Atlantic City.
Let me remind listeners too, Chuck, for 9 straight years, and you did it again this year. You've already done it. You've got them. We're just going to trade off at some point and pick up and have them ready to go for the night we stuff all the golfers' prize bags. But you have donated all the golf balls, which means a sleeve, 3 for each golfer. If we have 100 and some golfers times 3, you can do the math. It's always more than 36 dozen golf balls. And Chuck has made it possible for us to never spend 1 penny on a golf ball procurement. That's amazing. Chuck has contributed thousands of dollars to our charity over the years. So, Chuck, thank you for your partnership.
You're welcome, Harry.
Appreciate it. All right, so first quarter 2016 in review.
So let's kind of take a step back here for a second. So, as I mentioned just a few minutes ago, S&P earnings growth has now contracted, for 2 consecutive quarters, and we expect again after we get through the first quarter of this year, it's going to be more of the same. Most analysts are expecting, Harry, for additional weaknesses as we get into the second quarter. And so at that point in time, that's going to make 4 consecutive downward movements, a decline within corporate earnings. So most of the negative results, Harry, have been centered in energy and related industries. But now it seems as if the weaknesses appear to be spreading. I mean, if you take a look at the big banks, for instance, big banks in healthcare, financials in healthcare are the worst performing sectors of the S&P 500. And what the banks were year to date and what the banks were working on or not working on, what the banks were hoping to happen was basically an increase in interest rates. So the margins would be wider, those spreads, so to speak. And that's how they can earn money with wider spreads. But without that happening, the financials are going to have, especially the big banks, are going to have their fair share of problems as we get through this quarter.
Chuck, in the run up to 2008 and the whole financial meltdown, some people call it, there was such a push for banks and other lenders to have to do loans that weren't wise, prudent loans to do. These things called ninjas, no income, no job. How's that going to turn out, Chuck? Every time. That's like first payment's due, it's not made. Second payment's due, it's not made. Third payment's due, it's not made. And next thing you know, foreclosure. And it was just a horrible situation. Ninja loans, to me, were mind-boggling. I understand we're repeating this right now.
Well, look, Goldman Sachs yesterday announced they paid another $5 billion fine back to mortgage-related sales of bonds back in 2000. I'm not sure the exact year, like 2008, 9, 10, somewhere in that range. But I think investors need to be very, very careful about potential real estate and hot real estate. And Harry, there are certain parts of the country that real estate has moved up significantly. And I will tell you, and I think Brother Bill can probably comment better on it, is that the lending restrictions, it's a lot more difficult, to borrow money from a bank or from a mortgage company than it was, prior to 2008. So I think there is a lot to be said. Now, is there some wasted regulation out there, unnecessary paperwork? Yeah, I think so. But, I'm almost certain that we're not going to end up in the same crisis mode that we had with real estate that we had in 2008.
It's important. We're going to take a brief time out, approaching 30 minutes past the hour. Halftime break, 15 minutes or so, 17 minutes I think we can stretch with Chuck Malamut, our official financial advisor. He's close to 30 years in his business. We're in our 26th year together. Chuck, are you more than 30 years now?
Harry, it'll actually be 30 years this summer.
I knew it was close because I am able to remember we're about 5 years apart doing the show from your start in the financial services industry. Chuck Malamut, the official financial advisor to the Hurley in the Morning program. And I promise you, when you call Chuck and his team at 609-383-2010, you'll understand their concepts. They work very, very hard for you, and they introduce their concept of total asset management and the important asset allocation so that not only are you investing, but that you're investing in a way that makes sense in your particular situation. And Chuck and his team take the opportunity to get to know you, to understand what are your goals, what are your ambitions, when would you like to retire, and what would it take to get you there. 609-407-1450 is my phone number. Chuck's phone number is 609-383-2010. 609-383-2010. We're back 12 minutes and counting with Chuck Malamut, the official financial advisor to the Hurley in the Morning program, in our 26th year together doing this program. It's always been Tuesday morning at 8 o'clock for now the first quarter of our 26th year together. Chuck Malamut has been doing what he's been doing longer than that, and he is the leader. He is the managing director of his group, the Malamut Group, at Morgan Stanley's Northfield office, 609-383-2010 to reach Chuck and his team. And you're listening to Chuck Malamut present Your Financial Matters. Chuck, I know you want to talk about, and we have about 11 minutes, you want to talk about the U.S. economy. We're also going to talk about investor confidence. Time is yours.
So, Harry, we talked, because sort of did a Debbie Downer with respect to corporate earnings. But having said all that, we think that we kind of, hit the trough there, so to speak. And as we get through this quarter and maybe next quarter, earnings will start to improve in the second half of the year. So, with that being the case, we have to be very, very conscious of what we own, why we own it, and it's particularly in the case with certain types of equities. Now, I know that you're going to probably disagree as I make the next statement.
Thank you for your confidence in me.
So, the economy, the U.S. economy, looks to be reasonably healthy. Especially compared to the rest of the world.
I do agree with that. Regionally, if you had said regionally, you carved that out, though. I agree with that statement.
Okay, so here's what's happening. Jobs growth.
I would say we could be healthier.
We could be,
and we should be healthier.
We could be a lot healthier.
Take it.
So jobs growth has been a real positive sign here, a source of strength within the economy. We kind of talked about this previously, but if you take a look at employment, payroll employment, believe it or not, Harry, it's now more than 5 million above the 2008 peak. Unemployment rate has fallen from 10% back in 2009 to 5% today, and that's what I'm going to say. I'm going to put that disclaimer out there and say I know you're going to disagree with that particular point. Even the labor participation rate is picking up, Harry, now at this point in time, growing 3.9 million over the last 2 years, and it's the fastest rate that we've seen since 2007. we chatted about this previously. Manufacturing is now starting to pick up. That particular sector looks to be overcoming a fair amount of foreign weakness and that secular decline that we've had in oil prices. Now, on the flip side, modest debt growth and rising saving levels are acting as a drag, to the consumer with respect to spending. And they always talked about, remember, the three legs of the stool and how important the consumer is. So, overseas, with the weaknesses that we are seeing overseas is also causing problems, for exported-related industries. And we kind of chatted about that as well. And, one of the things that we have to deal with on a day-to-day basis, again, is the volatile energy prices that we're working through.
Going back to an earlier point you made, the reason I dispute the 5%, and it was 4.9 before it ticked back up 0.1% to 5%, is I track Gallup pretty much daily, Chuck, and if you take a peek there, take a look at that number right there on the H phone. What's that say? Top line.
Real unemployment, 9.8%.
Yes, exactly, and that's from the Department of Labor, their own numbers, U6 report. That's the real unemployment. I believe it's even higher than that. Also, Gallup does what's called Gallup Good Jobs. That's the percent of the adult population working. Then they have a stat that's called engaged at work. They have an economic confidence model, which is in the negative. It's negative 12 right now. The Gallup Good Jobs is low. It's at 44.7. Engaged at work, even lower, 34.6. Those are more. So when people hear all this stuff, 5%, that's like perfect employment. What's going on? That's really what it is. It's at least twice as bad as that. Chuck, also, I know that you are a huge hockey fan. For those who don't know, Chuck is a former team manager, very, very big booster in terms of youth hockey and things like that. I was so sort of caught up in the Flyers' incredible end of the season where they were winning these incredible games, 13 seconds left in overtime, winning shootouts, beating the Washington Capitals, who were the number one team in the league. And so the Flyers' reward for making their way into the playoffs is playing the Washington Capitals in the first round. There is a reason I'm bringing this up, and it has a radio purpose. Here on WPG Talk Radio 1450, with our program director, Chris Coleman, we're very, very proud to be your Flyer station here in the metro market. Many times we're the only place, really, that you can get the game on radio. Thursday of this week, 7 p.m. at Washington, is Game 1. Then Saturday, the 16th, is Game 2 at Washington. Then it moves back to Philadelphia. Monday and Wednesday, April 18th and 20th, both games at Philadelphia. And then if they're needed, because one team could sweep, the Flyers could wind up sweeping the Capitals 4-zip. It would be Friday, April 22nd. That would be at Washington if it's necessary. Sunday, April 24th at Philadelphia if necessary. And then if a deciding Game 7 is necessary, it would be at Washington. They've earned, with their great record this season, the home field advantage, home court advantage, home ice advantage. Wednesday, April 27th would be the 7th and deciding game. All here, every game on WPG. Talk Radio 1450. And Chuck, I bring that up because I know you're a huge hockey fan.
Yeah, unfortunately, Ed Snyder passed away.
He had been sick for a long time.
And maybe this is, maybe fate plays a big role here, and perhaps the Flyers can get on a continue the run that they're on. I mean, it's pretty amazing how they play their way into the playoffs based on such a awful start that they had at the beginning of the year. And it's kind of like the NCAA tourney. You get a hot team,
yeah,
and you start playing.
It doesn't matter what the regular season record is; it's how you're playing now.
It's a clean slate. You started ground zero at this point.
They prove they can beat anybody right now.
They can beat anybody.
They got a hot goaltender. Problem is only one because the other guy is no good, too young. But this is a heck of a draw in the first round.
It's a matter of seeding, Harry. If they had played better in the beginning of the year, they would have had a better seed. But look, you've seen a lot of teams, come from the bottom, so to speak, of the seeding, And if they play the right kind of hockey, and they play and you have a hot team,
and they are that,
chances are you can move on into the playoffs. And I absolutely think the coaching change they made was fantastic. I mean, they've all played into the system.
How about a guy that's never coached in the NFL and NHL?
That doesn't matter, Harry. It's a matter of
he's proven that
implementing your systems. Having your players buy in,
because it was slow going at first,
and it was a challenge. But certainly, the proof was in the results as they got to the end. And you're right, they won some games,
big games
that you would absolutely never believe going into the third period that they had a chance of winning. And so, I'm very, very interested to see. And they can get through this first round. I don't think there's no reason why they cannot.
It'd be great. And if they can beat Washington, they'll already prove to themselves they can beat anybody.
Absolutely.
They've already proved they can. Any given night they can win. Now can they win a best out of 7? Chuck, I know in the 2 minutes that we have, you're going to close out with investor
let's talk
confidence.
about a little bit of investor confidence, Harry. So it looks like over the next 6 to 12 months, investor confidence should improve. The economic picture that we sort of painted, has improved over the last couple months. Early in the year, a lot of us feared what was happening, the weakness that we were enduring here in the U.S. and Chinese manufacturing, could trigger a recession. That has not happened, as the data sets that we report and look at have, in fact, moved and strengthened. But having said all that, investor confidence still remains, somewhat, fragile. Investors are calling the strength of this global economic recovery that we've had into question, and many remain very, very wary, Harry, about the prospect for rising interest rates. I mean, we've talked about the Fed and what the Fed's going to do. I think that for the most part, most economists and strategists believe we're going to end up with 2 increases this year. The first one potentially coming in June, and the second one, sometime in the fall or early winter. So you have a fair amount of lingering pessimism within the marketplace, but as a result of that, we're going to end up continuing in this very, very slow expansion mode within the U.S. and hopefully we will see an increase in consumer spending. So with earnings improving in the second part of this year, that's going to provide a very, very nice tailwind, for equity. So in the near term, I think investor sentiment will recover, and we do need a number of reports month after month, to get everyone convinced that the economy is for real, and investors shouldn't be suspicious at that point in time to own equities.
Chuck, great presentation. As always, the program you just heard is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on Chuck's program are those of Chuck Malamut, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, thank you, my good man.
Harry, thanks for having me.
See you next week.
See you next week.
You got it. When we come back, a Food Network television star is in the house. It's Hurley in the Morning.